Well, Canadian markets are down. U.S. stocks are muted to start the week, a shortened trading week, that is. And joining us now with some stocks to watch is Diana Avigdor, portfolio manager and head of trading at Barometer Capital Management. It's good to have you join us. Thanks so much.
Thank you, Lindsay, for having me.
So we'll get into the stocks to watch in just a moment, but just like an overall look at the markets today. Obviously, we're seeing U.S. markets bouncing back. You say markets are in a discovery mode. What do you mean by that?
I mean that it's not as clear as it used to be in the beginning of the year and at the end of last year when there was clear rotation going out of technology into other sectors, undervalued, cheaper, commodity-driven. Everything was continuing in 2026 as it was in 2025. What we've had in the last 2-3 weeks is a period of discovery as commodities starting to consolidate a bit. I don't think it's any more sinister than that. But some of these commodities like silver, for example, are very, very volatile. And a couple of weeks ago, we had a Friday where it cracked to the tune of 30% in one day. And that was 30% that they rallied 14 days before that. So 14 days up, 14 days up, 30%, one day down 30%. That's the kind of volatility that gets people to rein in their leverage. So what we've seen mainly is the highly levered sectors have also gotten hit. And then slowly, the rotations did not happen. Sometimes the financials got a little weaker than other parts of the commodity market. So it's not as clear. It's in discovery mode where these commodities are going to find support. In the meantime, we have China closed for Lunar New Year. So we have a demand out of the market. We'll see where they settle. But that's what I mean by discovery mode.
Okay, now you have 10 to 15% of your portfolio in cash, you say, and you may be looking to exit some more positions. What areas would you exit and why?
Well, the way we do things is that we have a saying, price does have to match the narrative. So, for example, we've had earnings season. Some stocks reported some excellent earnings, and they just didn't act well. So we've exited a large money center bank. We've exited technology stock. We're pretty underweight technology to begin with, but we had about 4 positions. Now we have 3. If the stock reports really well and the narrative is really bullish, and then it sells off 10, 20%, 30%, that doesn't bode well for the stock near-term future. And in order to decrease the volatility in the portfolio, there's lots of other places to be in. You don't have to be in the ones that are so volatile. So we've taken down as the prices hit our threshold of pain, let's put it that way, or, not stop loss per se, but levels where we're not willing to see the stock go lower. We put it in our farm team, and then we'll see as we may re-enter them at a later date when it's less volatile.
Now, we do have some gold and mining stocks reporting results this week. Are there any particular ones that are a favorite for you or anything you're watching for in terms of certain companies that are reporting?
Yeah, so we've exited a lot of our precious metals exposure a couple of weeks ago. We still like the theme, but the metals have rallied a lot and fast, and the period of consolidation, like I just mentioned, is not out of the question. So we'll re-enter in due course. But in the meantime, we have many of our stocks, those stocks in our farm list. One of them that we did keep is Agnico Eagle. And the reason for that is really record production, strong free cash flow, continued cost discipline, and, it's in areas that are geopolitically safe. Dividends, share buybacks, it's all there. So it's a large cap, don't really need to move down the capitalization pipe there, reported already, and it's acted well.
You also like Caterpillar, which beat estimates recently. It's also doubled in the last year, its stock price. I wonder, with Caterpillar, how much further do you see in terms of growth for that company?
You see, this is what I mean, though, when we say that we want to make sure that pricing acts the same way as the narrative. So you do take a company like Caterpillar, and they already reported, so that risk is out of the way, and it acted well. And it's in the right sector, like industrials. But for example, should it not have acted well, and you're holding it for the last couple of years, you would have had great profits. You may not catch the top, but if it was to sell off, there'd be a level where we would say, okay, we're going to take some profits, put it in a farm list side and see if we re-enter again. We still like Caterpillar. Caterpillar is characterized as an industrial, but it also has a connection to the power theme. They make natural gas turbines that go into powering data centers, which is really in play. It's really a high margin, high growing business. And in their latest report, they said that power and energy segment posted a 44% profit. And it acted well. It traded the way that the narrative was supposed to make it trade, unlike some other companies when we started our conversation today that we exited that just had great reports and did not act well.
For sure. Okay, so we talked about precious metals. I'm wondering, when we're talking about investors and being cautious in this environment, when it comes to the price of oil, like I wonder where you see oil going this year. Do you have any companies within that sector that you're feeling bullish about?
Yeah, so the energy sector has been really in play, and despite the fact that oil is not at some incredible high, despite the fact that we have some geopolitical stresses out there, the stocks have been acting really well. So like we have exposure through mainly the large caps, CNQ, Suncor, Imperial Oil. These are, again, acting really well. You don't have to go down the capitalization curve. You can really get exposed to the largest of caps with the buybacks and the balance sheet discipline and very strong free cash flow and dividends. I mean, CNQ has really low production costs and very strong free cash flow. Suncor has both upstream and downstream, allows them earnings insulation when crude prices are volatile. So the world cash flow is flowing to this sector, mainly because, the macro is pretty good. Mm-hmm. And I wouldn't discount the fact that Canada is part of the global trade. So, there is a trade that, says that maybe ex-US is perhaps a place to be. Portfolios are now diversified more globally after a long period of U.S. outperformance.
Right.
And I think that Canada is getting some of that cash flow.
Okay, that is all the time we have, but so good to get your insight. Thank you so much for joining us.
My pleasure. Thanks for having me.
That is Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital Management.